The Chinese EV market is about to get a lot spicier here in the US. We've just learned that a new company is about to go public on a US exchange by the name of Zeekr Automotive. This is a subsidiary of Geely, which is the parent brand of Volvo, and this company is expected to go public at a valuation of nearing $13 billion. This is obviously a very big deal because this is going to be the biggest IPO from a Chinese company since 2020, since the entire DD debacle. So in this video, I want to discuss exactly the offering that Zeekr is bringing onto the table, how they're planning to differentiate themselves with their battery technology, and how their vehicles are going to fare with some of the more popular publicly traded companies by the name of XPEV Motors, NIO, and Li Auto. Because as we all know, sentiment against Chinese companies is already quite low, and so it's going to be ever more important for the right companies to go public to maintain their US relations. But as usual guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So to start things off, let's just understand where Zeekr's coming from and how much money they raised so far. Right now, their valuation is sitting at around $13 billion after having raised $750 million from an investing round from Capital. This is obviously in the private markets, and this company is not publicly traded just yet. But the reason why this is a big deal is because Zeekr has said they want to go public this year, meaning their valuation is going to be north of $13 billion at IPO. Now, this is a really interesting one because yet again, this is going to be the biggest EV IPO we've seen since probably XPEV Motors in the US. And this is coming at a time when not only is competition heating up, but demand for Chinese stocks and companies from US investors is skyrocketing. Yeah, believe it or not, Chinese companies are actually very valuable. They provide really good margins, great exposure to a manufacturing hub in Asia, and also offer lots of diversity. You have EV makers coming from all sorts of backgrounds with all sorts of product offerings that can completely disrupt Western sales. And the IPO market is only starting to heat up with that movement. We just had a company by the name of Hesai Group, which is a LiDAR technology company based out of Shanghai, go public on the NASDAQ just last month at a valuation of around $1.5 billion, having raised around $190 million. There's a couple of important things this tells us as investors in Chinese businesses. First of all, the risk of a delisting is completely thrown out the window for companies that are going in the direction US regulators want them to go. Meaning if you're filing your quarterly statements with the SEC on a regular basis, you're disclosing your assets in China, and you're following the ADR regulatory framework, you're not going to be at the risk of delisting. You just have to follow the rules. And in my opinion, if Zeekr does go public in the US this year, there's going to be a big brand shift around the image of Chinese companies listed in America. Yes, as investors, it's been a tough time, but companies that are in China do develop solid products with solid technology and actually much better quality than you would expect. Competition from so many businesses is rising at an exponential rate that people have not kept up with that in the West. As a matter of fact, Zeekr in the private equity market is now worth more than XPEV Motors on the public markets, which is worth around $8 billion. As an investor in XPEV Motors, this is actually a very good thing. I obviously understand the company has not performed that well in 2022, but as we know, the entire sector has been hit with supply chain issues and strong headwinds faced by the Chinese recession. As a matter of fact, it's been known that private equity valuations tend to hold much better during bear markets than public valuations. Obviously, in the public markets, it's more sentiment-driven movements, which are driven by hedge funds that are trying to get a return for their clients. As a result, there's a lot of in and out of trading, out of valuations and stocks, and obviously the media can manipulate what prices are doing in the short term. And even if business fundamentals are poor, at some point the valuation gets overstretched to the downside, resulting in an oversold condition. That is something that just does not happen in the private equity markets. And even if it does, it tends to happen with a 4 to 6 month delay. So right now, public markets, for example, in China have been selling off since the end of 2020. As a result, private valuations came down throughout 21 and 22. But now that the Hang Seng Index has bottomed at the October of 2022, private equity valuations are still holding up. And Zeekr's valuation is an image of what's going on in that space. But obviously, we still need to understand what is Zeekr's product market offering and how are they going to fit into the overall China EV picture. Zeekr is a brand of Geely, which again is a subsidiary of the Geely Group, which sold more than 1.4 million cars in 2022 with all their brand images. Geely is one of the biggest investor-backed conglomerates in China, and as you can see, they've taken majority stakes in businesses like Volvo, Polestar, Lotus, and even smart cars. They've turned some of these businesses around completely, but they now realize the EV opportunity is ahead of them, and as a result, they just recently launched their first EV-only brand, which happens to be Zeekr. This company was just founded in 2021, and their 001 vehicle is expected to be the longest range car in the entire world. It is a very big, luxurious vehicle with a price tag of almost $45,000 US dollars, but it holds a range of almost 650 miles. The range is thanks to a 140 kilowatt hour battery pack from CATL, which invests in Geely and Zeekr. It uses CATL's Quilin battery architecture to deliver more than 13% of the power from a comparable Tesla battery pack that uses their new 4680 cells. This is truly a revolutionary lithium-ion technology that is going to be first realized with the Zeekr brand. And the craziest part is you can charge from 10 to 80% in almost just under 10 minutes. That is obviously defying most expectations about electric vehicle battery technology. And as a result, if Zeekr plans to sell vehicles in the US or Europe, this is going to be a massive threat to established companies like Tesla or Mercedes and BMW. And if you account for the fact that the Zeekr 01 is supposed to be a luxury crossover style hatchback vehicle and only starts at $43,000, it really goes to show you the economies of scale that the Chinese battery production market is facing. When you have a company like CATL that not only produces the chemical compounds to make cells, but also the modules and the packs and puts them all together into one optimized package, it really sets into perspective how fast prices for electric cars are going to come down. There's going to be no more room for internal combustion engine vehicles on the road by like 2035 if cars like the Zeekr 01 can come onto the market with such a competitive price tag. Because of this, I think Zeekr's IPO in 2023 is going to be a pivotal moment for the overall Chinese EV sector. This isn't really a competition between these companies at this point. It's really more a competition between US automakers and Chinese ones. And in terms of numbers, even though Zeekr was just founded in 2021, in 22 they beat their 70,000 sales target by apparently quite a big margin. This is obviously around half of what XPEV Motors is doing and around 1/3 of what NIO is doing. And Zeekr CEO has said that they expect to launch an MPV and a crossover this year, not only in China, but especially in Europe, in Norway, Sweden, and the Netherlands. And they've also already targeted 140,000 unit sales this year, which is going to surpass the sales of its nearest US-China competitor, XPEV Motors. This company certainly looks extremely promising with a product that beats many metrics from established OEMs. Let me know your thoughts down in the comment section below of Zeekr and whether or not their valuation is too expensive given their lower unit sales than compared to XPEV or NIO. As usual guys, thank you very much for watching and I'll catch you guys in the next one. Take care.